So, you want to be a Bitcoin billionaire? We've all heard the stories. Someone buys Bitcoin, forgets about it, and suddenly they're swimming in digital gold. Okay, maybe not billionaire gold, but you get the idea. Bitcoin is volatile, yes, but it's also a potential gold mine. The problem? Figuring out how to invest in it is a complex task. That's where Bitcoin ETFs come in, your translator to the exciting world of cryptocurrency. Think of it like this. You want to invest in coffee beans, but you don't want to deal with the hassle of storing them, keeping them fresh, or accidentally making 10 cups of espresso at 3 a.m. A coffee ETF is like buying shares in a company that handles all that for you. You get exposure to the coffee market without the caffeine headaches. Bitcoin ETFs work the same way. They allow you to invest in Bitcoin without the need to buy, store, or secure the actual cryptocurrency. No need to worry about digital wallets or the risk of hacking. You can simply buy shares of a Bitcoin ETF and gain exposure to Bitcoin's price movements. This makes it easier for traditional investors to get involved in the cryptocurrency market. Plus, Bitcoin ETFs are traded on regular stock exchanges, making them accessible and convenient. So, if you're looking to dip your toes into the world of Bitcoin without diving in head first, Bitcoin ETFs might be the way to go. They offer a simpler, more secure way to invest in the future of digital currency. And who knows? Maybe one day, you'll be the next Bitcoin success story. Ready to start your journey? Let's dive into the world of Bitcoin ETFs. Let's break it down. ETF stands for Exchange Traded Fund. Basically, it's a basket of assets, stocks, bonds, or in this case, Bitcoin, that you can buy and sell on a stock exchange just like you would with regular company shares. No need to create a crypto wallet, remember your private key, and lose sleep over it, or navigate the sometimes confusing world of cryptocurrency exchanges. Bitcoin ETFs offer a more familiar and regulated way for traditional investors to dip their toes into the crypto pool. They track the price of Bitcoin, so when Bitcoin goes up, your ETF goes up. When Bitcoin takes a dip, and it will, it's Bitcoin after all, your ETF follows suit. But let's dive a bit deeper. ETFs are designed to be easy to trade. You can buy and sell them throughout the trading day at market prices. This flexibility makes ETFs a popular choice for many investors. And because Bitcoin ETFs are traded on traditional stock exchanges, they benefit from the same regulatory protections as other securities. This means more transparency and oversight, which can be reassuring for those who are wary of the often unregulated world of cryptocurrencies. Another advantage is that Bitcoin ETFs can be held in traditional investment accounts like IRAs and 401(k)s, making it easier to include Bitcoin in your retirement planning. And because ETFs typically have lower fees than mutual funds, they can be a cost-effective way to invest in Bitcoin. However, it's important to remember that investing in Bitcoin ETFs still carries risks. The price of Bitcoin is notoriously volatile, and this volatility will be reflected in the ETF's price. So, while Bitcoin ETFs can make investing in Bitcoin more accessible and less intimidating, they are not without their challenges. In summary, Bitcoin ETFs offer a way to invest in Bitcoin without the need to directly buy and store the cryptocurrency. They provide a regulated, familiar, and flexible investment option, but it's crucial to be aware of the risks involved. As with any investment, it's important to do your research and consider your financial goals and risk tolerance before diving in. Not all Bitcoin ETFs are created equal. Just like there are different roasts of coffee, there are different flavors of Bitcoin ETFs. Spot Bitcoin ETFs, these are the purists. They invest directly in Bitcoin, tracking the actual market price. It's like owning a piece of the Bitcoin pie. Futures Bitcoin ETFs, these ETFs invest in Bitcoin futures contracts, which are agreements to buy or sell Bitcoin at a specific price on a future date. Think of it like betting on the future price of Bitcoin. Bitcoin miner ETFs. These ETFs invest in companies involved in Bitcoin mining, the energy-intensive process of verifying and adding transactions to the Bitcoin blockchain. It's like investing in the picks and shovels of the Bitcoin gold rush. Leveraged and inverse Bitcoin ETFs. These are the high rollers of the Bitcoin ETF world. They use leverage to amplify returns, which means bigger gains but also bigger losses. Not for the faint of heart. Hybrid Bitcoin ETFs. These ETFs offer a mix of Bitcoin and other assets like stocks or bonds. It's like a balanced breakfast for your investment portfolio. Each type of Bitcoin ETF has its own risk and reward profile. Understanding these differences can help you choose the right one for your investment strategy. So, whether you're a purist, a speculator, or looking for a balanced approach, there's a Bitcoin ETF for you. Under the hood, how Bitcoin ETFs actually work. So, how do these magical Bitcoin ETFs actually function? Let's break it down step by step. Well, it all starts with a fund manager. These financial experts are responsible for the ETF's investment strategy. They decide which assets to include in the ETF, such as Bitcoin, futures contracts, and other related assets. They also work closely with something called authorized participants, or APs. APs are like the middlemen between the fund manager and the market. They play a crucial role in the functioning of Bitcoin ETFs. These APs buy the underlying assets, like Bitcoin, and give them to the fund manager in exchange for ETF shares. This process is known as creation. Conversely, when the ETF shares are sold back to the fund manager, the APs receive the underlying assets in return. This is called redemption. This creation and redemption process helps keep the ETF's price in line with the value of its underlying assets. It's a continuous cycle that ensures liquidity and price accuracy. Investors like you and me can then buy and sell these ETF shares on the stock exchange through our regular brokerage accounts. It's as simple as trading any other stock. One of the main advantages of Bitcoin ETFs is that they allow investors to gain exposure to Bitcoin without having to deal with the complexities of buying and storing the cryptocurrency directly. This can be particularly appealing for those who are new to the world of cryptocurrencies or who prefer a more traditional investment approach. Additionally, Bitcoin ETFs are regulated financial products which can provide an added layer of security and peace of mind for investors. So in summary, Bitcoin ETFs work by allowing fund managers to create and redeem shares through authorized participants, ensuring that the ETF's price remains aligned with the value of its underlying assets. This makes it easier for everyday investors to gain exposure to Bitcoin in a regulated and straightforward manner. Easy peasy. ETF versus Bitcoin. Which one's right for you? So, you're ready to jump into the world of Bitcoin, but should you dive headfirst into the deep end with direct Bitcoin ownership, or ease in with the floaties of a Bitcoin ETF? If you're tech-savvy, enjoy the thrill of the crypto Wild West and want complete control over your Bitcoin, then direct ownership might be your jam. But if you prefer the familiarity of the stock market, value the security of a regulated investment vehicle, and want to avoid the hassle of managing your own Bitcoin wallet, then a Bitcoin ETF is your new best friend. Let's break it down further. Direct Bitcoin ownership means you need to understand the ins and outs of cryptocurrency. You'll need to learn about wallets, private keys, and the best practices for securing your digital assets. This can be a steep learning curve, but it also offers the highest level of control and potential for profit. You are your own bank, and with that comes both freedom and responsibility. The volatility of Bitcoin can be both exhilarating and nerve-wracking. Prices can skyrocket, but they can also plummet just as quickly. If you thrive in high-risk, high-reward environments, direct ownership might be for you. On the other hand, a Bitcoin ETF offers a more traditional investment experience. You can buy and sell shares through your regular brokerage account, just like any other stock. Bitcoin ETFs are managed by professionals who handle the complexities of Bitcoin storage and security. This means you don't have to worry about losing your private keys or getting hacked. Additionally, Bitcoin ETFs are regulated by financial authorities, providing an extra layer of security and peace of mind. This makes them an attractive option for those who are risk-averse or new to the world of cryptocurrency. Ultimately, the choice between direct Bitcoin ownership and a Bitcoin ETF depends on your personal preferences, risk tolerance, and investment goals. Both have their pros and cons, and it's important to do your research before making a decision. Whether you choose to dive into the deep end with direct Bitcoin ownership or float along with a Bitcoin ETF, the world of cryptocurrency offers exciting opportunities for growth and innovation. So, take your time, weigh your options, and choose the path that aligns best with your financial goals and comfort level. Happy investing!